Hello students, welcome to Accounting Explained at AccountWise Academy. This is Latha Venkateshwaran. Dear students, this is our second video on the prospective method of depreciation. In the previous video, we have already covered the concepts and solved the exam style question for change of depreciation from straight line to WDV. Now we are going to see a brief introduction on the prospective method of depreciation, and later we are going to solve the exam question for change of depreciation from WDV to SLM. Okay, if a company decides to change its depreciation method from straight line to the declining balance method for an asset with a prospective application. So if a company is going to follow the prospective method of depreciation for change of depreciation from straight line to declining balance method, the depreciation for the current and the future periods will be calculated using the declining balance method. So the new method will be used for calculating the depreciation for the current and the future periods. We will take the book value of the asset as on the date of change. Okay, and take from the book value we are going to calculate the depreciation. The depreciation for past periods when the straight line method was used would not be adjusted. So the depreciation for the previous periods will not be touched. Here book value means cost of the asset less depreciation charged till date. That is the change till the date of the change of depreciation. Okay students, now this is the exam style question which we are going to solve today, where we are using the prospective method of depreciation for change from WDV to straight line. ABC Limited depreciates machinery at 10% per annum using the diminishing balance method or WDV. On 1st April 2023, the machinery account shows a balance of 9,72,000. This means the machinery account is showing a book value of 9,72,000. Okay. During the year 23-24, machinery purchased on 1st April 2021 for 80,000 was sold on 1st October 2023 for 45,000. New machinery costing rupees 1,50,000 was purchased and installed on 1st October 2023 with installation charges of rupees 8,000. So when you take the cost of machinery to the machinery account, you are going to take 1,50,000 plus 8,000, 1,58,000. So if they have given in the question installation charges or erection charges, you have to add it to the purchase price of the machinery and you have to take it to the machinery account. This we have already discussed in our previous videos while doing depreciation chapter. I will be sharing the link in the description box for the previous videos on depreciation. You can go through those videos for a better understanding. Okay, the company changes its depreciation method from WDV to straight line method effective 1st April 2023. So the company has decided to change the method of depreciation from WDV to straight line with effective from 1st April. So 1st April on the date which we have the book value also. The same date the company is planning to, or company is changing the method of depreciation, keeping the depreciation rate changed. For the SLM method also they are going to keep the depreciation at 10% per annum only. For both WDV and SLM method they are maintaining the same rate of depreciation. Now you are required to prepare the machinery account for the year 23-24. Before opening the machinery account, let us do all the working notes needed for this question. Okay, first is our working note number 1. For this working note, we are going to do that machinery which we have sold on 1st October 2023. For that, we need the depreciation charge from 1st April 2021 to 1st October 2023 or 30th September 2023. That comes to 2.5 years. That is the first step which we are going to do to find out the depreciation on this machinery for rupees 80,000 at 10% per annum using the diminishing balance method for 2.5 years. Okay, this is the depreciation of old machinery which we are going to find out. For the year 21-22, it is charged under WDV method, right, at 10% per annum. So first year we take 80,000 directly. At the rate of 10%, it comes to 8,000. Second year 22-23, we will take only the book value of the machinery because we are following WDV method of depreciation. So the book value is 80,000 less 8,000, 72,000 into 10%. which comes to 7,200. 23-24, one interesting thing has happened. See here, the company changes its depreciation method from WDV to straight line method effective 1st April. So 23 starts from 1st April. On the date of 1st April itself, they have changed to SLM method. For SLM method, we have to take only the book value. Okay, when changing the method of depreciation, the book value of the asset on the date of the change is used. So the book value of the asset on the date of change is 80,000 less 8,000 less 7,200, which comes to 64,800. Okay, are only used regardless of the previous method, whether we are using a straight line or WDV, we have to take only the book value of the asset as on the date of the change. Remember this is very important. So 64,800 into 10%, we have used the asset only for 6 months, that is from 1st April 23 to 30th September 23. 6 months. April to September is 6 months. 6 divided by 12. It comes to 3240. So the total depreciation charged is 18,440. Next, let us come to the account for sale of old machinery table, where we are going to find out whether we have earned profit or incurred loss on that sale. Okay, first is cost of machinery sold. That is purchased on 1st April 2020. What is the purchase price of that machinery? It is given as 80,000. So take 80,000 here. Next, we have to take the sale price, which was sold on 1st October 2023. It comes to 45,000. Take 45,000. Next, depreciation on old machinery. That is 10% per annum for 2.5 years comes to 18,440. From this table we are taking 18,440. Next, we have to find out the book value of machinery sold. Book value of machinery is cost less accumulated depreciation. Cost is 80,000. Accumulated depreciation is 18,440. So this becomes our book value 61,560. The last step is to find out the loss or profit on sale of machinery. In this case, we have loss on sale of machinery. We are going to find out by deducting sale price from the book value. So book value is 61,560. Sale price is 45,000. So our loss on the machinery is 16,560. Okay. If the sale price exceeds the book value, then you get the profit on sale. That is obvious, no? So here, since the sale price is lesser than the book value, you have incurred loss on the sale of machinery. So this is our working note number 1. Students, now let us do the working note number 2. In the working note number 2, we are going to find out the depreciation for the existing machinery. Here existing machinery means you have a balance on 1st April 2023 of 9,72,000. That is the book value, right? It is for group of machineries. Okay, out of the group of machinery, one machinery which was bought on April 2021 for 80,000 was sold on 1st October 2023. So we have to take that part out and we have to have the net balance. On that net balance, we are going to calculate the depreciation. Okay. First, let us find out the book value of the sold machinery. For that, you need the book value as on 1st April 2023. Since we have the balance for this group of machinery on 1st April 2023, similarly, even for the sold machinery, you need to have the book value as on 1st April 2023. Okay, that part is clear, right? Now, let us come to the depreciation calculation for the sold machinery. Okay, sold machinery, we charge depreciation under the diminishing balance, right? Till 1st April 2023, they were following the WDV method. So here, WDV method is followed. Sold machinery, purchase price is 80,000. First year, 80,000. And WDV is at 10% rate. So 80,000 at 10% is 72,000. This machinery was bought on 1st April and sold on 1st October 2023, 2021 to 2023. That is, it has been used for 2.5 years. Now we are going to calculate only for 2 years, 21, 22 and 22, 23 only. Okay, 1st April 21 to 1st April 2023. That comes to 2 years. For second year, you take the book value of 72,000 here. Since we are following WDV method of depreciation, this should be on 72,000. That is 10% of 72,000 is 7,200. When you deduct 72,000 minus 7,200, you get 64,800 as the book value of the sold machinery. And the total depreciation charged for 2 years for this machinery is 15,200. Okay. Now let us come to the calculation for the existing machinery depreciation. First, opening book value of machinery as on 1st April 2023 is given in the question as 9,72,000. Take it as 9,72,000 less book value of machinery sold as on 1st April 2023. What is the book value we have calculated? 64,800 minus 64,800. In other words, you can write as cost of the machinery sold is 80,000 less accumulated depreciation for the machinery which we have calculated here. See, 15,200. That comes to 64,800. When you deduct 9,72,000 from 64,800, you get the book value of the existing machinery as 9,07,200. Now, the depreciation rate is 10%. Here, we are changing, see here, the company changes its depreciation method from WDV to straight line method effective from 1st April 2023. So, this depreciation rate should be on SLM, straight line method. Okay, but for this, we have to take only the book value. Though we are following straight line method, we have to take only the book value. When changing the method of depreciation, the book value of the asset on the date of change is used. So here what we are using? 9,07,200 only. Regardless of the previous method, whether it is straight line or WDV. Okay, so we are taking 9,07,100 into 10%. So depreciation for the existing machinery for the full year, that is 2023-24 will be 90,720. So this 90,720 will be the standard depreciation amount for the rest of the life of the asset because we are using straight line method of depreciation. Okay, that part is clear, right? Let us go to the working note 3 now. In this, we are going to calculate the depreciation for new machinery using the straight line method. Cost of new machinery is 1,58,000. Depreciation rate is the new rate for SLM method, that is also 10%. Okay, 10%. Depreciation calculation is 1,58,000 into 10%. This machinery was bought on 1st October 2023. So we can charge depreciation only from 1st October 23 to 31st March 23, which comes to 6 months. Okay, into 6 by 12. So the depreciation for the new machinery will be 7,900. Now we will do the machinery account as we have completed all the necessary working notes. Machinery account is like any other ledger account and it will have the columns of date, particulars, amount, date, particulars, amount and DR on the left side and CR on the right side. First, we will see here in the question, 1st April 2023, machinery account had a balance of 9,72,000 to the debit of it. This is the book value of the machinery which we have brought down from the previous year. So on 1st April 2023, two balance brought down 9,72,000. Next, on 1st October 2023, you have bought a new machinery for 1,58,000. When you buy a new machinery, asset value is going to be increased. That is, machinery value is going to be increased. When the asset value increases, debited. Machinery account to, again, another asset bank value is going to be reduced because you are going to pay from bank. So it has to be credited. In this journal entry, you have credited the bank account. So in the ledger of the machinery account, it will be debited on 1st October 2023 to bank account, new machine 1,58,000. To pass journal entries very easily, you should know the golden rules of accounting. I have shared the link of the golden rules of accounting in my description box. It will be in the playlist and the playlist name is Journal Entries Made Easy. So go through it and be thorough with the golden rules of accounting to do accountancy. That is the foundation of the financial accounts. Okay. Now coming to the question. Next, on 1st October 2023, you have sold the machinery which was bought on 1st April 2021 for 45,000. For that you have to pass entry for the sales, right? That will be the reverse entry of the purchase. So bank account debit to machinery account. This is the journal entry you have to pass. Bank account is asset. When you sell, asset value is going to be increased. So bank is debited. Again, when you sell machinery, the asset value will be reduced. That is why you are crediting. In the journal entry, bank account is debited. In the ledger of machinery account, on 1st October 2023, bank is credited. By bank account, sale proceeds 45,000. Next, let us see the journal entry for depreciation for the old machinery and loss on sale of machinery. Okay, depreciation is an expense, we all know. So, depreciation has to be debited. Depreciation account debit to, it will be taken from machinery account. That is, the machinery value will be reduced. Asset value will be reduced. So, credit machinery. Here, depreciation is debited in the journal. So, in the ledger on 1st October 2023, by depreciation of old machinery, we will refer to the working note 1 and fill the amount later. Okay, next, loss on sale of machinery. All losses and expenses will be debited. So loss on sale of machinery account debit to machinery account. Machinery value is going to be reduced because there is a loss on the sale. So here in the journal, loss on sale of machinery is debited in the ledger of machinery account on October 1, 2023 by loss on sale of machinery. Again, working note 1, we will refer and fill it. Okay, at this point, I want to tell you, please like and subscribe to our channel if you find this video helpful. This will motivate me to create more videos like this for you. This is the working note 1 which we did previously. From here, we are going to take the depreciation for 23-24 for the sold machinery. Since the machinery account which we are doing is only for 23-24, we are taking the depreciation only for 23-24. That is for 6 months which we calculated. That comes to 3,240. And loss on sale of machinery, we calculated it as 16,560. That will also be taken to the machinery account. October 1, 2023, depreciation for the old machinery 3,240 from working note 1 we are taking. Similarly, from working note 1 on October 1, 2023, by loss on sale of machinery, we are taking it as 16,560. Next, we have to refer to our working note 2 and take the depreciation for existing machinery. That will be on 31st March 2024 by depreciation account. This is the working note 2. Here, we have calculated the depreciation for the existing machinery as 90,720. That will be taken to our machinery account. On March 31, 2024, by depreciation account, working note 2, we refer to existing machinery, 90,720. This will be the depreciation for the whole year. Okay, that is why we are writing it as 31st March 2024. Next, we will see the working note 3 and take the depreciation for the new machinery by depreciation account on March 31, 2024. For the new machinery, depreciation is 7,900 for 6 months. That is from 1st October to 31st March. That we will take to the machinery account. On 31st March 2024, by depreciation account for the new machinery, referring working note 3, we write it as 7,900. On seeing, we find out the debit side balance is more, that is 11,30,000, and we take that to the credit side also. On deducting all the credit amounts from 11,30,000, you get a balance of 9,66,580. You write it as 31st March 2024 by balance carried out. With this, we are completing the prospective method of depreciation, and we have completed both for straight line method to WDV and WDV to straight line method. If you would like to inquire about the online classes which I take or to get more worksheets, you can contact us at acc.wiseacademy@gmail.com.